Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have JJ Kinahan. He's the chief market strategist over at TD Ameritrade. We're going to take a look at June retail trading trends on TD Ameritrade's Investor Movement Index, the IMX. JJ, as always, great to have you with me.
Thanks for having me.
Now, this is interesting. In June, it dipped down 6%, even though the major averages were each up over 7%.
Yeah, our clients were net sellers of equities actually in June. And so I think there's a couple of reasons for that. Number one, they've had a pretty good first 6 months. I think the markets outperformed most people's expectations. We still have the tariff situation undecided. We have a rates meeting, and I think people were just like, I've done well. Why not take some money off the table? And the one stock I think that may surprise people that, led the way, so to speak, on the selling was Apple. And Apple, as you and I have talked month after month, is a stock our clients tend to accumulate. It's still the #1 held stock at TD Ameritrade. And clients took some risk off the table there. As Apple rallied, people were willing to sell it.
It was interesting, the net buys this month, very interesting mix. Tesla, Beyond Meat, so if your IPOs in there, you have a marijuana company in there, and then you have, good old Disney.
Yeah.
It's a very interesting mix.
It's quite an interesting mix, and I think it shows a little bit of the effect of our millennial clients. Millennial clients have been just month after month. They believe in the Tesla story. There's just no two ways about it, and so it paid off pretty well in June as the stock got down to the mid 170s, and so people came in and bought it, and it's just I try and figure out, is it the Tesla story itself? Is it the appeal of Elon Musk? I think there's some combination thereof. I do believe that superstar CEO, so to speak, has a lot to do with that.
I remember with Apple, this is like mid-2000s, 2010-ish, 11-ish, same thing too. You just had fanboys that believed in the product more so than the company or the stock, although that's played out differently than Tesla. But you do have a core base of fans out there and investors.
There's no question about it. You have people who believe so much in what's going on, the whole ecosystem around the product and the people around the product, that they want to be involved with it somehow. Even if they don't necessarily, in the Tesla situation, they may not be able to afford the product, but they believe in the product overall, whereas Apple was a little bit different in that most people could afford a phone or an iPod or whatever it may have been at the time. You think back to the mid-2010 when people were buying that stock because they believe so deeply in Steve Jobs.
Are you seeing a lot of traction with the IPO stocks?
Absolutely. Uber has been one that our clients have certainly taken, and Slack. Those two in particular, our clients really have come to buy. And it's interesting, if you look at some of the products, as you say, this is an interesting product mix, but if you start to see the influence of some of the younger people on our index overall and on our trading overall, so you have a marijuana company, Tesla, Uber, Slack. These are companies that I think are more familiar perhaps to people who are a little bit younger than they may be to some of the older investors. So the millennial influence and how they're living their life, I think, is a much bigger influence on the market overall than people think.
Well, that's interesting because Snap, they were net sellers of.
They were. And we saw this actually with Twitter last month, in that, as these stocks started to have some sort of rally, or in the Snap case, maybe a bit of a downgrade, that the clients were like, not necessarily, so to speak, or taking profits where they can.
All right, we're going into July earnings. Sometimes you get that slowness with summer trade. I don't know. I have a feeling there is not going to be any shortage of headlines in this month.
No, I don't think there will be, Jill, especially when you look at this. I believe the number is now up to 89 companies that have warned ahead of time. That number is usually around 76 for this quarter traditionally. So there should be some volatility there. I think we're all interested to see, as companies talk about, what is the influence of tariffs so far. Has there been any? We've seen really a mixed bag there. The financial firms having to fight back against the fact that rates are lower, and that affects their bottom line. How have they done against that backdrop? And that may be more important even for the regional banks than it is for the banks that'll start our earnings overall. And then, of course, the retail picture, where I think it will continue to be a very much name-by-name story. I think it's hard to paint all of retail with one brush because they're still trying to figure out what they do with brick and mortar versus online.
All right, JJ, as always, thank you so much for joining us.
Thanks for having me, Jill.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, global market